Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. What a battle. Sometimes these computers are just totally irritating. And today is one of them where the computer fought with me for the last couple hours, and I guess you could say we've succeeded. We're back on schedule here, and that's where we are, and that's where we're going. Let's put up the dollar index right there. Let's go over to it there. Interesting. It's really moving up this morning. They're still trying to figure out what the Fed's going to do in February, and that seems to be there was talk of 0.25. Remember when they did the 0.50 last month, And now the concern is it's looking like 2.5. Let me just put it up here. Then I can finish off Robin's stuff at the same time. All right, let's see where I'm at this point on Robin's work also. All right, so that's what's going on there. You can see there's the dollar index. That's a daily. Look what it's been doing the last couple of days. Let's put it up over here on Chicago Quant at the same time. Right there, and right there. There we go. And dollar index doing the same thing. It closed in a daily buy yesterday, right there. A little surprising. You can see the weekly is actually threatening on the upside also at the same time, which is a tad surprising as far as I'm concerned. It seems like they are thinking like, oh, we're going through this whole battle again. That's what it really seems to come down to at this point. It's like, that's basically the whole attitude at the moment. Not only that, I got something out of Grant's. Metho, how you doing? Good to see you. Sorry about that. Had some technical difficulties. The amount of inflation that's going on around the world, quantitative tightening. Ed Hyman was on Larry Kudlow last night. One of the major, basically philosophical trading money guys on the planet for decades. And he was saying that the quantitative tightening that's going on everywhere right now, and supposedly ECB, he's saying, is doing twice the amount of everybody else, which is pretty powerful when you think about that. They are trying to tighten up the marketplace, and obviously they're getting closer and closer to doing it the right way, I guess. That's what it really comes down to. And so markets should be feeling this pressure, but due to the fact that the European Central Bank had been tightening twice as much, was giving energy to the pairs trade. And now the pairs trade is, hey Robin, the pairs trade is basically falling apart. We can see it with the, where's it at? There we are. We're seeing that action. Let's see if we can put it up over here. Let's put the euro up there really quick. Let's go over to that. Go like that. Oh no, I could do it from there. Just do it from there. There it is. You see this? It's moving down, and we're playing with the weekly sell with that at the same time. It's like, what? Where did that come from? You know what I mean? It's definitely making you think a couple times. And then, like I said, I heard there's a real comfort level now of confusion. Yeah, comfort level of confusion, and that is that they're starting to think maybe they're going to do another 50, and everybody had been cheering for 25. But Hyman came out and he said that they should start to slow down and start thinking about it. But right now the numbers are being pushed in every direction. So let's see if that message kind of has gotten out the door. That basically maybe that should have been the direction taken. I'm not sure. But that's what's going on. Interest rates right now, just that quarter percentage point is making some traders very concerned. And so they're pushing on the pairs trades, and we're even seeing the weekly challenge. Now, only time tells in the end result. We'll see if they really stall out like that, or if they they finally kind of go to that attitude of, okay, yeah, that they're going to delay. I don't know. In other words, it's going to be fluctuating. I don't think you can look at the pairs trades and think like I've been thinking for months. Oh yeah, pairs are going to benefit, dollar's going to lose. I've been saying that over and over, and it's been doing that. But just in the last 3 days, we're starting to see this really strong concern that what everybody thought was going to happen is not really happening. I mean, that's really what it comes down to. It's not really happening. And so if it's not really happening, then what really happens in the end is that there's going to be, they're going to flatten out. And so that's what we're seeing. You can see it right here. You're seeing over on the Chicago Quant, you're seeing we're playing with the weekly there. We go over to the euro up on, where is it at? The euro right there. And put the weekly. You can see the daily moving down aggressively the same way. And let's see what the weekly is doing. It may have flipped already too, just because of this action. And if it hasn't flipped, it will flip by the end of the day with what we're seeing if it stays in this price area. Yeah, it's just starting to do it right there. Look, it's just starting to do it. And so that is really the gist of it all. I mean, that is really the concern. And it doesn't look like they're going to be able to change that in any fashion whatsoever. Well, again, the numbers tell us the true, the true directions of a market. And so what we'll do is we will, watch and see how they trade them, and the whole bit. I mean, that's pretty much how it always is. In other words, sometimes someone will jump onto the webinar here and they'll go, "What do you think over the next 6 months?" And I go, my heart says I think dollar should be going down, because I really believe that interest rates are going to peak out, and the rest of the world's interest rates are going to stay firm in that situation, and people will move back into their into the currency pairs, and that would make sense to me. But what we're really starting to see is another mix of confusion again. We're seeing that they're not comfortable just with what is really amazing. Matter of fact, I just saw today the Japanese bond market is at its highest in X amount of years, and people were like, in China, not China, I'm sorry, Japan, and Bank of Japan, people were saying, well, what's going on? What's broke? They were actually like concerned. They were so used to the fixed rate in Japan that they're now kind of saying, wait a minute, what's broke? And it's like, no, nothing's broke. Interest rates rose. We have inflation across the planet. I saw Argentina has 100% inflation going on right now. 100%. They were interviewing a painter, like an artist, and he's taking. It's cheaper to take the currency than buy the canvas itself. He's buying currency, putting it all together, and then painting it white, and then painting on top of that, because the currency is that undervalued at this point. So, when we look at the marketplace, these things, you can't just look down the road and say, okay, we're going to, because, see, there's an ugly word out there that people get nervous about all the time. They always want to tell you that you got to keep politics out of financial markets, when in fact, monetary policy is what moves financial markets. In other words, if they raise taxes on you, then as a money manager, you're going to find a way to not move your position around. You're going to do things that are analogous, or work in the idea of not getting trapped and paying more taxes. You pay more taxes, you have less profits. And a lot of times people always want to tell you, I don't want to hear about politics. And it's like, politics is what moves the markets. It's the taxes. It's the monetary policy. It's the limiting or increasing opportunity for business to grow. And as much as a lot of people would like to pretend that does not happen, they are truly misunderstanding the whole financial system because they are linked together all the time. So it's that's where we stand at the moment, and that's where we are at this moment in time. This ECB is tightening twice as hard as the Federal Reserve, and now we're seeing that come back and bite us. Is that now it looks like the Fed is going to increase its tightening to equal ECB, and what do we see on the screen there right now? We see this. We see this all of a sudden looking very fine. Started the week off with the green line above the time manifold. In a matter of 4 holiday shortened week, it's playing with the weekly sell. So it shows you how much influence we're seeing from the Federal Reserve, and people are dodging the obvious question, and that is when is it going to stop? And we're not sure. That's what it comes down to. And some have been saying all along we're going to go to the 5.1% area, and we've seen bonds, we've seen the interest rate markets project 4.8, 4.7. And I noticed this morning, I'll show it to you right now, right there, here's the 10-year. And the 10-year is not acting anything like the 30-year. All of a sudden, the 10-year is taking a dip. Remember, when the price of a bond goes down, we're starting to play with it here. You can see that. It's in a weekly sell. All right. Now, it was trying to lift up. Everybody was comfortable with the idea of a 0.25% interest rate increase in February. Now, all of a sudden, they're starting to think a 0.5 percentage point. And when the whole world is tightening, you get those pressures on the different currency pairs. All right. I hope that's made some sense on what we're seeing here, because I know I've spoke some evil words like politics. And I know people get frustrated when they hear someone talk about politics in the financial markets, but don't have much of a choice. It's just part of the process. And so from there, let's go over to the British pound. Let's see what the pound's up to this morning. We talked about this yesterday. It seems like it was picking up the signals ahead of time. It's the 4th day now. We're in a daily sell. Same thing. Only thing is that it went into the weekly sell. Let's move that line up more. It's right there. It went into the weekly sell last week. So it basically, I think I mentioned that not supposedly, as far as I know, until Japan and China came along, Britain was the biggest partner in buying U.S. bonds and investing in U.S. stocks. And over the last 10, 15 years, they've caught up with Britain. Britain has always been a big investor since the revolution. They've been a big investor in the financial markets here in the United States. And now we're starting to see, the British pound. We go to the simplest thing. The British pound this week and last week have been really signaling this action coming. And that's pretty cool in the sense of this, to see it still hold its position of recognizing. Now, the yen, I guess what we could do I guess it makes more sense to just jump over to the yen to see if it's being influenced. And pretty much we saw that the last 2 days. Let's go to the yen. We saw that, and we'll skip the Swiss for the moment. But we've seen the yen, go into this buy 3 days back, or it started to leap into this buy. And let's do this. Let's remove that, and let's just move this one over. That's all. And it's in the buy here. It had been in. Let's grab this sell and move it over. It had been in the sell, and then out of nowhere, we talked about these two big gaps because of the committee in Japan deciding to raise interest rates, like a 50% increase in interest rates. They went from 1/4 to 1/2, which is a pretty powerful move. Actually, it's a 100% increase in interest rates. But they widened the range. So you can see it here. The weekly is jumping up. It's done the same thing as the euro. Here it is underneath the manifold for a couple of weeks. And then within 1 week, it's already into the plus. It's making a quick dash to it, which just basically tells you the pressure that's being put on. Let's just save that. Save workspace there. And so we're seeing that action in the global markets being twisted now because they don't have a clarity of what the real prices should be at this point. And that's I guess that'll basically hang out like that for the next couple of weeks. I hope Ed Hyman gets his voice to the Federal Reserve. I hope they think about what he has to say, solely because they should pause. They should do a quarter percentage point. We're seeing inflation move down. You can see what the U.S. House of Representatives is doing. They're fighting hard to stop all the spending. That's what this whole fight is about for the speakership. They're fighting really hard to stall out the overspending. Whereas the Republican leadership in the Senate capitulated and said, yeah, sure, spend a couple more $1 trillion. We don't care. And so 19 Republicans joined in with the Democrats back in December when they could have, if they hadn't done that, this battle wouldn't be going on right now. And so now the 21 or so that have the power, which I support enormously, are doing what has to be done to stop this enormous insanity of financial irresponsibility by the U.S. House of Representatives. They're the ones that write the checks. They're the ones that control the money. And right now we're just adding trillions of dollars of debt. No doubt the Americans can afford it, but there's no reason to spend it because you're going to afford it. I've never been a big fan of that. I always think to live under means, not over means. I can tell you how many times a few friends have complained about not having jets, instead renting jets, private jets. It's like that type of thing. And that's the way my mind works. It's like they shouldn't be overspending when they don't need to overspend. And that is pretty much where we're at the moment there. All right, and then let's go back to the Swiss here. You can see the Swiss is doing the same thing. It started marching up the last couple of days. It started to pick up the banker nation, I guess you could call it, has realized what was going on this week right from the beginning. And you would think they would. And you can see we've been in that weekly sell from this slide. And here we are right there. There's the line, and you can see the strength in other words, the Swiss has been losing against or at least projecting that the dollar is getting stronger. It's been projecting that, and you can see it right there on the there. And then we go over to, let's see, right there. Yeah, you can see that right there. Did I put the little circly thing in? I didn't put the little circly thing in. Let's put that little circly thing in. Doing the same thing as the others have done. They were cruising along the bottom manifold with no problem, and here they are, bang, right across the zero line into the weekly, which is like, wow, surprise, surprise. It wasn't my finger. And you can see it here over on J4X. There's the weekly right there. I bet it's turning green. Yep, look at that. You got that little green action, the same thing. It's starting to turn up. Hey, let's see if I can say that name. How about if I call you OM? That makes it even easier for me. Hey, OM, how you doing? So, yeah, that's what we're seeing at the moment. We're seeing this type of, the world, the quantitative tightening is going on. They've been working at quantitative tightening. We just thought that the U.S. Federal Reserve was going to tighten less. And all of a sudden, it's back into that situation again where it looks like it's going to tighten equally with the ECB. Look, the whole world is tightening at this point, and it doesn't have much of a choice. The inflation has shaken, as I gave you that example about the inflation with the, what was his name? Argentina, the country of Argentina, where a painter there, a renowned, respected painter, has started to use the currency itself, the paint on, because it's cheaper than buying the canvas. And when you see things like that, you start to think, uh-oh. And then you got to assume central banks are going to try to tighten the market up, try to put things back into perspective again in a healthy way. And that is pretty much where we're standing at the moment there. And as you can see it in both charts. So where do we go from here? We go over to one of those countries that we've talked about a lot, and that is right there. That is the Turkish lira. and you can see, what's interesting is that they seem to be stable against. Matter of fact, it seems to be gaining against the euro, which is really interesting. And let's just take a look at it in the eyes of. I think that's the last one, Robin. And then let's see. There is the dollar Turkish lira, and I bet it's still firm. Yeah, look at that. And even with those wild moves of last week, we had the panics. Was it? Let's see. This is right there, and then was that Monday and Tuesday of last week? And last year they had wild moves in the currency again. Running from 18 up to almost 19. That is wild moves. And then it did it the next day again. Obviously, that seller was done, and then the buyer came in to do the same thing. You can see the buyer came in towards the end of the day, and you can see it there. And then you can see it calms down again. And you can see we're in a daily buy, and we're in a weekly buy for 2 weeks. So we see that strength. Now, let's go back to the Turkish lira euro. It's holding on by a very small amount. It's still in a weekly buy right there. Let's go like that. You can see it's been that weekly buy since mid-October. So let's see, that line needs to be fixed. Let's move it down right there. And so it's just hanging on by a thread, and you can see that the euro is losing value against the Turkish lira, but the dollar is holding up against it. Just shows you the odd relationship that goes on with that location stuff going on. And let's put it up over here. Let's see, where's it at? Let's put up the Swiss. Move the Swiss out and go with the Turkish lira. There it is right there. And you can see all green still here, just like it is right there. All right. I have to answer this text, but you can see it right there. And so that's pretty much where we're going with that. And OM, is it okay if I call? And I guess its last name would be Martazuk, and I would just like to call you OM. It's just easier. I hope that doesn't offend you. Is it okay if I call you OM? You can give me one of those little wave hands. That's cool, like Metho does. And I think Robin does that too once in a while, which is really cool. And let me just answer this. My son wants to know about something. Of ground. There we are. Now we're going to jump over to the Canadian, and then we look at the Canadian and we look at the South African rand. Those two particular currencies normally follow the metals complex and the energy complex. So we'll jump over to that and see how that rolls. Let's see, upper. And so then we go over to, let's see, there it is. There's the Canadian. And that is really the answer to that one. All right. And let's put it up over here at the same time. We'll put up the crude oil contract. We can go with give you a quick view of here's the, where is it at? Where's light crude? It's around here somewhere. There is Brent. There's copper. There's the Bund. Dollar. Light crude. There it is. Right there. And you can see we're trading at 73 and change. We're down towards the bottom end of the range. Let's put the daily up there on that. And so as this loses value, this usually pushes up, as you can see right here, it usually pushes up the Canadian, which means it loses value. Oh, cool. Thank you, OM. I appreciate that. So if you'd like to see anything, just let me know. I can stop what I'm rambling about. We go through this pattern every day, but we don't have to. We always stop when someone wants to see something. In other words, if you wanted to see the S&P 500 or you wanted to see a particular currency pair or talk about a different currency pair, we are glad to do so. You want to look at interest rates? We'll go look at interest rates. You want to look at soybeans? I'll look at soybeans. We're always willing to look at anything anybody wants to look at instantly. We just put you in line. Sometimes there might be a couple of people asking questions, and we do each one right behind the other. But we don't have to do this pattern. We can always jump around. And you can see here, the last 2 days it's been lifting up. And it's been trying to lift up. Now, what is interesting is we're still not, what is that? That put it into the buy yesterday? Let's double check that. I think it did. That put it into the buy yesterday. So we can let's steal the buy from here. Oh, I'll just steal that red one and turn it green. So it went into the buy there. See what happened was it went into the sell there. And then it went into the buy. Let's grab that buy line and put it right there. It went into the buy here. So it's a second day in a buy on the upside here. At the same time, just as we were flirting most of the week with going into a weekly sell from this move and these moves in here, it turned right back up again. So we're seeing the pressure. It's losing against the dollar. But overall, when I tighten that up, you can see it's been really sloppy, going nowhere. In other words, it's basically interpreting the energy market. This is where oil went up to like $85 or 80 some odd dollars. Brent was up to 85, and then all of a sudden, you see that the Canadian dollar starts to move up away from the dollar. It's losing value, and sure enough, when you go and look at there's the light sweet crude. The next thing you know, it's feeling that same pain. Let's just put that in there again, like there. We'll put crude in there, and you'll see that same action. There it is right there. And you see the pressure. It's been in the sell for 4 days now, and the pressuring down. And today it's, moving down again, and you can see, this did the same thing. I guess it's this week. So in other words, coming into this week, we were on the top part of the manifold. And you don't usually see that as big a dips unless you get some real pressure. Like when we went into the sell here back in December at the beginning of the month, went into a daily sell. And then the next thing you know, the manifold was so tight that by the end of the week, it broke down, and the sell came in like right there on the weekly. And then look at all the damage it did. It fell down from, what was that, 77, 60, 50. Call that close of 77.50. Within 4 days, it was trading at 70. So it dropped $7 in 4 days. That pressure came on, and they're starting to. In this case here, it's kind of interesting. We had that big drop from the 81 area, and we've fallen in just 2 days. It fell down to 72. It dropped $9 in 2 days with that daily sell. And you can see our weekly has been there right along with it, falling down. Right from the beginning of the week, it pressed underneath. So we're a little surprised of the action overall. We thought that they were going to start the year off a little bit slower, but I guess when you have inflation and the economies are not growing, you get this type of pressure. And that is really what's going on there. All right, and then from there we take a look at the South African Rand, and we'll put gold up on the screen like right there. And gold is all of a sudden out of nowhere just started to roll over on us. Silver has done it. Silver's in a daily sell for 2 days now, or 3 days. I think it's 3 days on the silver. And you can see here the pressure is coming on, and silver's underneath the weekly. Gold is still holding up, just by the hair of its chin. It's holding up. It's just above the zero line here. Matter of fact, do we have a zero line? Let's put that zero line in there. There it is. It's holding up. It's still above it. And I saw this. I was going to talk about it. There was this great article about all the central banks in the United States have been buying gold now for weeks. And I found this article. It was really reputable. In other words, it was a real legit writer, and they've been saying that they've been monitoring it, and they've been seeing central bank buying of gold now for over six weeks now. So Kind of neat. And we see it in our charts too. Our charts picked up on it. And that story, let's see. So from here we go like this. We'll put South African Rand in. Right there. And you can see that pop that's going on the daily there. Let's take a look at it here. There it is right there. You know, it's going right back into that, what we call the political triangle. I guess you could say in some ways it's changed that dimension. Like that. It's moving up to the top end of that, which is kind of surprising. It broke it here, which was surprising. But I guess they have not resolved the political problems that they have down there. You know, they found $520,000 in the president's office. It was hidden underneath the seats of the sofa. And don't ask, I mean, why would they even go investigate that? I have no idea. But in the end result, I mean, in other words, someone obviously tipped the officials off and said, guess what? You know, there's $520,000 in the sofa in the president's office. And so they went in and checked and they found it, and they were expecting a resignation. And that's what this move of the South African Rand was. These 2 days was when it happened. And you can see now, what is that? That's 1 full week, 2, 3, 4, 5. We're going on 6 weeks now. It has not really been resolved. And at the same time, when we go back to gold, you can see we've been in a weekly buy since the 1650 area. And then when that happened, you can see it kind of flattened out and stopped growing. Then it seemed like it was chilling, and we kept on seeing more growth. And we haven't hit like 1900. I'm still amazed that we're not at like 4,000. I always think that gold should be half of Bitcoin or a quarter of it, one or the other. It's hard to believe that it's not. You know, because Bitcoin has become like, the electronic gold in a sense, or metals, the precious metals. Bitcoin is that. You can transfer it. They can't influence on it too much. And, you would think that they could influence it because they trade futures on it. So you would think the Federal Reserve would come in and just beat the daylights out of the... but the problem is that they can't create new Bitcoin. And that's why Bitcoin looks the way it does. In other words, everybody's like, we're bored. I hear people in the financial markets go, like on the talking heads in the news, we're bored. Bitcoin isn't doing anything. And I'm saying, I'm looking at it after the FTX disaster, I guess you could say right there. I think that's pretty impressive. Look at that. I mean, let's turn that into black too. That is pretty impressive in the fact that it hasn't collapsed. So in other words, 2 days they sold it down because that's what was lost in Bitcoin in the FTX bank or wallet, however you want to call it. But you can see here, overall, since then, it's only gone higher. Got up to 18 and change here. It's hanging out in the 16 still in this area here. Let's put that line in. Let's see if we can put the line in there. And there's the 16s. And so, problem is the Federal Reserve can beat the futures up, but they're going to have to deliver them. And the problem is that they can't print Bitcoins. And that's why it's very stable. And so cryptocurrencies are extremely stable because the Federal Reserves and the central banks across the planet. Matter of fact, that's going to be our title today. Is that the cryptos, the central banks can't print cryptos. And that is exactly what the problem is there. And never have we had a better example of it is right here. After the FTX collapse, I guess you could say we could do that. Let's put that in there. FTX crash. Right there. So that's the FTX crash right there. And Bitcoin is holding up beautiful from it. It's been parked there and, just holding up. no problems. And it's mainly because they can't print it. And whereas gold, they have paper gold. So in other words, the central banks, they work in slow motion. They say, okay, yeah, you want your 2 tons of gold, you'll get it in 2 years, but it's yours. And in other words, it'll be valued at this price. And so 2 years from now, if gold is trading, $100 more, you get it at the price you bought it 2 years ago. But we won't physically deliver it to you for a while. And they collect it up. They buy it in the market, slowly exercise it out. They do that whole, game there of delivery. So, and this is a good example of that whole thing. So when we go back to the South African Rand, right there, it's moving up against the dollar. It's losing against the dollar. And, of course, gold is... There it is right there. It's moving down the last few days and gotten into a sell, and it's just holding on with a very tight range there. All right, the last currency we look at is the Mexican peso. And then we'll go over to the metals complex. And there's the peso. And as I've been saying, I know I'm using bad words, but as the politics in the United States gets better and the financial responsibility gets better, then what happens is that you see that the Mexican peso gains against the dollar because the country benefits when it's a healthier American economy. So that's where we are with this at the moment. All righty. From there, what we're going to do is we're going to jump over to, just close that out, and you can see that's a euro literally at the bottom of the day. And there's the stock indices. And let's go back over to here. There is silver. Let's put silver up there. As you can see, actually silver's doing a little bounce now. That's good. You can see it looks like if they don't bounce it much, it looks like it's going to stay in that weekly sell. And I guess we'll have to wait and see what they do with it next week. Now, what's really kind of crazy, talk about crazy, and look at copper. Copper's playing with its weekly sell also. And at the same time, it's in the second day of a daily buy. So it's lifting back up into the high 80s. The world is in a very strange position right now when it comes to interest rates and inflation. And so funds and managers and, demand, supply and demand is really having definitely a different characteristic to it, the whole event. Let me take a sip of water. I fought with that computer so long this morning that I don't even have my tea. There we go. Now, let's go over to, I want to see what platinum's doing. Where's platinum? There it is right there. So they've taken about $50 out of it. Today they brought it down to 57. And the high 4 days ago, is that right? 3 days ago. The high 3 days ago was $1,103.70. So they've taken almost $50 out of it. And you can see right there, it's trying to get into a daily sell after a couple weeks in a buy. Let's make that bigger. Right there. But the weekly doesn't seem to be having much problem here. So I'm not worried. I'm thinking that the metals complex is going to bounce. That's what I'm thinking. So there's platinum. So that completes us with the metals complex, unless someone wants to ask a question or go back and look at something. Now let's put it up over here. I want to see what copper looks like if it's doing the same thing on J4X. There it is. See if they're flirting with the weekly. Yep. Getting that red again there. Right there. So been an interesting move from this lows since the Communist Party conference closed in China. We've seen a nice bounce since the conference closed. They have a 5-year Congress that comes every 5 years, and they make policy for the next 5 years. All right, and then from there, let's see. We'll go over to. I guess we'll go over to the energy sector and take a deeper look at that. So from there's the front month in crude. You see, it was trying to lift up today, and it seems to almost flatten out now. Over here, you see that there. And you can see we're playing with that weekly sell. And then let's see what Brent is doing right there. Brent is 78 now. Yesterday it was in the 79s. No more than a few days ago it was in the 85s. And this is the weekly there. And let's put the daily in like so. And there's the daily. 3 days now. They've knocked it down from the 85s up in here. Even as high as 87 with a hinky ashki. And 4 days later, here we are. Then from there we go over to natural gas. We'll put natural gas, U.S. natural gas. It's the only natural gas contract we can eyeball at the moment. And there it is, right there. I'm answering my son now. Just got a message from him. Then you all right. So let's put natural gas up on the screen here. Right there. You can see the natural gas has been cruising for a bruising. It's been in that weekly sell now since like the $9 area right there. What is that? $9.17, something like that as a high. And so it's been in that weekly sell all the way for this ride south. Guess they were watching the sunspots. You can predict the warmth of the planet or the coolness of the planet. Just watch the sunspots on our sun. The sun controls 99.9% of the weather on Earth. So, when you have something so powerful that can control 99.9%, and we've been getting pounded. First of all, we've had some really powerful sunspots, and at the same time, we are physically 8 million miles closer to the sun yesterday. That's at the most. Yesterday we were at the closest point of the year next to the sun. Usually we're about 99.8 million miles, something like that, away from it at its furthest point. And so we're up. Well, I guess you could say we're like 10% closer to the sun, and at the same time we've gotten hit by a lot of what they call CMEs, which means corona mass ejections, or heavy. What happens? We have corona mass openings on the sun itself, and the solar wind kicks up. It goes from, say, 300 kilometers a second to like 600 to 700 kilometers a second. It doubles in speed, and so that influences our weather, has an influence on our clouds and lightning and the whole bit, the upper atmosphere, and so. We've been getting really hit hard. Matter of fact, we got some more stuff coming in. And I just saw on the Tokyo channel, I have the news channel up all day long, that they're having like April warmth spots out. They just had record cold. I guess it was about 7 days ago. And now they're having record warm. So, when you have that, natural gas is needed for X amount of months. And so it puts pressure on it. And you can see here, natural gas is now cruising at the 357, what's that, 3578 area? Something like that. And yeah, you can see it there on J4X. So there's the natural gas. It's been, this is the daily. It's been falling. And when we go and look at the weekly in the United States, it's the same thing. And we're at what they refer to as, or what we refer to in science as solar maximum. We're going through solar maximum right now. In other words, we get more. The sun. How does it work? Basically, I'm just giving you just a general idea here. The sun, every 11 years, the North Pole and the South Pole flip on the sun. And it goes, first it's positive on the top and then negative on the bottom, and 11 years later it flips. It does it clockwork every 11 years. And then at the same time, every 11 years we go into a solar maximum or a solar minimum, where you're getting the least amount of CMEs hitting the Earth versus the maximum amount hitting the Earth. And that happens every 11 years. And we're in the 9th year right now of that flip. So we're coming into the peak of 9 years of, and the solar activity this particular 11-year period has been stronger, which was predicted. We've been moving up in cycle in strength. So it doesn't surprise me that we're seeing natural gas see this pressure. It makes total sense to me. All right, just a little science thing there if anybody cares about weather and so forth. I did some meteorology. Physics majors were allowed to do meteorology. Matter of fact, they didn't let anybody else but physics majors do meteorology at my school in undergrad. They let this one physical chemistry major do it too, but only and we had the second largest physics department in the East Coast. So we had the deputy director of the National Weather Bureau teaching weather. So if you ever care about asking questions about weather, we got plenty of answers to it. All right, from there we go and look at the only way we can view natural gas or gas in general in Europe is by going to a Spanish corporation that sells energy, and so their stock goes up when they're making money, of course, and when energy is dropping in price, they lose money and their stock loses money. Just your basic concept there. And there it is right there. It's trading at the low 24s. We have seen, this is what, the weekly chart. We've seen it as high as the 30s up in here. We've seen its lows down at 22.5, and we are now moving down. This is the weekly chart. So you can see here for the last 5 weeks, we've been moving down pretty much. It seems like we're slowly inching our way. I'd imagine, where are we at now? We're in January. So I'd imagine by March, when the spring months start to come in, we'll probably see this stock fall down into the 20s again. Low 20s, 22, 21, something like that. And you can see it adjusts for the same situation. You see back in the spring of 21, you can see there, it fell down into that area. The spring of 22, it falls down into that area. You can see the spring of 20. Remember we're moving into this solar maximum. As we move into the tail end of the solar maximum for the next 2 years, this company will the pattern shifts with it. So, alrighty, from there that pretty much does it when it comes to the energies, and so we can take a look at the stock indices. And so there's the S&P 500. You can see it was flirting with a daily buy, and we can remove that now. This morning it was flirting with it. It's just underneath it by 267, as you can see right here. Just right there. It's just underneath. I don't think you can see it again. Can you see it? Oh, no, here it is right there. Now we're at 150. It was 267. Now it's at, what is that? That's $2 now. It's moving around. You can see 217. You can see it right there. Yeah, the algorithm 283. Feeling more pressure. We're towards the lows of the day. I think yesterday's lows were. What were yesterday's lows? Let me just double check it. Let's go over and take a look at it in a more intimate, much more precise way. Let's go like this. Let's see, where is it at? We'll go like this. Now this is a 1693 contract chart instead. And so what we can see, matter of fact, we could go even more. We have a 23,601. So yesterday we went down to a low of right there, which was 2250. And then and these lines represent, it goes long and goes up, and goes into a sell here and it goes down, and, goes in a buy right here and goes up for a couple bars and then goes into a sell, catches a good ride there, goes into a buy right there towards the end of the day. Yesterday runs up, and you can see now for the last 5 bars, it's been in an intraday sell, and it's been going down, from the 3,830 area, ran to the 40 something. What was that? 40. The high was 37, but still in the end finished off at like 22 or 25. Now we just made a new low in here, and it's just jumped back up again. So we just saw it jump 4 ticks. Let's go over to a much more precise bar. Say something like the 786. You can see it there. It just made those lows, and we just jumped into the buy right there. And now you're getting your pop. So now this is a little different. We have only one client that uses this particular combination. It's the 3-5. The cyan light blue is the 3. The 5 is the green. Everybody's used to that. And then we usually have a white histogram, but in this case here we have the 2 instead running against each other. So we have the 3 running as the histogram, which means it's moving very fast, compared to the 5, which is moving slower. And when they join together, that's the buy signal. And when we see the volatility signal, you take it with the volatility signal. Whereas when you're following just the green and the white, like we do on a daily. Let's just go back to a daily or something like that. Right there. So in other words, over here, you see the white and the green, and the blue is hidden altogether. You don't even see the blue on this one because it's just a 3 overall. It's a fast moving. But the green and the white are just standard deviation differences. They're both going to be plus or they're both going to be minus. So just an interesting insight to the whole action there. And so from there, you can see the Tech 100, taking out the lows of the day also. You can see the same thing going on in the, let's go over to, let's see what the Russell looks like. There's the Russell. The Russell hasn't taken out yesterday's low yet. It's still holding up in there. But it's still in that weekly sell for like 4 weeks now. With that pressure from over in here. You can see our sells, the buy was nothing. Couldn't take that buy anyway because we're in a weekly sell. What else can we say about any of those? I guess I could have been moved over one. That's about it. So the pressure is more on the downside than it is on the upside. And this is a very speculative indice, the Russell 2000. All right. Where do we go from here? Let's jump over to the big daddy, the S&P 500. I'm sorry, no, the Dow Jones Industrial Average, the big daddy. Yeah, we have numbers coming out too. The December job rate numbers coming out. They're looking for 200,000 at 3.7. Let's see. Let's find the Dow Jones Industrial Average. There it is right there. And you see it's been in a weekly sell for 4 weeks right there. Let's put that in. And at the same time, it's been in a daily sell for, I think, 4 days now, something like that. It was in a sell from here and it went back into it again. And it's trying to hold the buy. That's interesting. The futures contract is trying to hold up. We are seeing some strength in it. It's up like 11 points. It's just a small little action, whereas the others are all rolling over daily. This one is still kind of reminds you of Bitcoin, doesn't it? In many ways, you got the. I guess is that the same spot, 1213, where Bitcoin collapsed. I don't know what we call it collapse. It was just $4,000 drop. I mean, it's held up pretty well. Or 2,000, maybe it was 2,000. I think it was 2,000 drop. Not the worst. Oh no, it's okay. So it was around 21,000 and fell to 16. So it is a decent collapse. That's like a 25% drop. And what's the date on that? That was 11/4. Yeah, so it happened well before that. That's weeks ago now. Let's see. Let's go back to the Dow Jones Industrial Average. Right there. So the pressure is pretty much on the downside when it comes to stock indices. And I would assume, I mean, you remember that there's interest rates have an effect on earnings and so forth. And that's why the Tech 100 is down 35% for the year. And the Dow Jones Industrial Average was down 9% or right around there. So, the influence of interest rates are less on the old established companies that have very solid product lines and so forth. Whereas like a Microsoft, they turned around and showed their earnings and the stock dropped $12 in one day because they show that that the cloud work, the money that they're making in the cloud is drying up. So other companies are eating, as we would say on the trading floor, the other companies are eating their lunch. Now we can hang out here until the numbers kick out. We'll get a flavor of it all. But I think today, more than anything else, I really feel that that the big discussion was in the interest rate market itself. I really do, and I think that the cryptos really represent the fact that the Federal Reserve can't print them. They can move interest rates up and down. They can basically move gold up and down, but they can't print cryptos, and that really makes it a real challenge for them. It really does. Okay, so they're talking the job market pretty clearly. All right, here comes the numbers now. Matter of fact, we should have the short-term stock indice out because it will show us what's going on there. There you go. Look at that. So they exploded it. The number came out, and it ran from 20 to 70. I'm sure the number must have been really bad. Whereas ADP was good and knocked the market down, the Dow Jones Industrial Average has been up as much as 200 points. Now it's swinging in 50s. 150, 100, 149, 173, up. 223,000 jobs. Something doesn't make any sense. It's a strong report. I would have thought it would knock it down. And unemployment went down to 3.5 from 3.7. And they were expecting 3.7. So that's wild. I don't know if it's going to hold up any. Rianos used to do a webinar on this stuff. How you can't trust fundamentals anymore. And so you can see here, the number comes out, and within few seconds. So it's 730.05 to 7:30:09 in 3 seconds. 3 seconds, it moved 50 points. Okay, so they're saying there's a lot of people not looking for work. SL fishing. What's SL fishing? What's SL? Yeah, so they're saying. Hey, how you doing? No, I'm just watching the unemployment numbers. Yeah, yeah. I was doing a webinar with that, so I'm going to cut off now. But yeah, it's in 3 seconds they moved the Dow up 50 points. Well, no, wait, the future's 50 points, and the oh no, wait a minute. What is that? That's the S&P. They moved the S&P up 50 handles in 3 seconds.
50 handles?
50 handles in 3 seconds.
Oh my God.
Yeah, what a distortion, huh?
Oy vey.
Yeah, really. It's losing it. It ran up to 3,870, made new highs, and now it's trading at 3,840. So they're backing and filling it. But what it's showing is that people are not going to work, and that's why it freaked out the market. And they've just taken the 10-year bond up even more.
Of the report, what did they say? Lost, gained, what?
They unemployment dropped to 3.5 from 3.7. They were expecting 3.7, but participation is at 6.2. Average earnings, hourly earnings, is up almost 4.6%. Because of the inflation. But what some are thinking is that what it represents is less people are applying for jobs. That's why it's dropping. I know that doesn't make a lot of sense. So in other words, it's a statistical thing. So it drives down the unemployment rate even more. That's what Obama set up when they changed the Bureau of Labor Statistics stuff. So when less people are looking for work, it drives the unemployment down, not up.
I get you.
Yeah, it's a way of fit. It's a false thing. Yeah,
False positive.
exactly. They changed the stats around in it. They got to clean that mess up too.
First they need to elect the Speaker of the House.
Well, they'll get that done. McCarthy will be good. The Freedom Caucus is getting what they want. So
What was it that they wanted?
term limits. They want to at least be able to vote on term limits. They want to be able to vote on. They want to vote on balanced budget. They want to be able to vote on individual back to normal procedure. They've not been able to vote on individual increases in government spending for a long while now.
Oh, since Nancy was in there.
No, it's been since Obama basically. They've had it tangled up where they just couldn't get away with it, and the House would join in with no matter what side, and they would do things. So now they're going to, try to straighten it out.
They really should investigate this.
Metho says, what's Metho says? Then it goes down. Fishing, a stop loss, and then the stop losses. The stop losses fishing. I see. Yes, Metho says that's what it is. Fishing the stop losses, and then it goes down, and then the stop losses are the shorts. Exactly. Yeah, you can see it there on the chart. There live. So, all right, trade. I'm gonna jump out of here. I'll call you right back. All right, traders. This is Doc. Just trying to show you the craziness that goes on in the fake media and the fake statistics and so forth. Dow is still holding up pretty well, as you can see on the S&P 500. It's halfway in between where it took off from at 3,820 right here. Ran up to 3,872, and we're trading basically at 40. So it's stuck in the middle there. It's like one big triangle here. That's what it looks like. Isn't that cool? It's like a triangle. Let's put that in there, the triangle. It's like a WD GAN 7 triangle. I guess that's the first triangle right there. There's the second triangle right there. I guess that's it, right? Oh, no, here's the first triangle, I guess, right there. Wow. What a mess that is, huh? And then it gets pushed up to here. Whoop. And the end result is I don't think it's going to help anything. It just shows a bad economy. And, at the same time, no real confidence. All right, traders, we're out of here. This is Doc from North America watching the crazy unemployment. And yes, thank you, Metho. SL, I'll write that down. Short, was it? Stop losses. That's it, stop losses. Yeah, I've seen that done in the trading pit. I'll explain to you what I've seen back in the old days where they actually trigger the stop losses. I can tell you how I seen them do it slowly. In these times, they do it really fast. So, anyhow, this is Doc from North America, planet Earth, saying, happy trails to you until we meet again. Happy trails to you, to all our trading friends, and that includes you, Metho. And let me just throw this at you. The Dorsey Wright X's and O's, they used to go into the pit, and they used to use those to knock out the stop losses. Because that was like one of the prominent technical tools back in those days. So, anyhow, bye-bye for now. You too, Janos. Have a nice weekend.